Hello and welcome back to another episode of Chat with Brandy, a show where we talk business and personal finance, taxes, and how to make money doing what you love. This is episode number 20. I am your host, bookkeeper, and tax preparer, Brandy Miron. Today I just want to say quickly that there may be a couple of technical difficulties. So first of all, you can see that the lighting in here is a little bit wonky. I do not have my production assistant with me today, and she usually takes care of that kind of stuff. So that's just why, for some reason, the bottom half of my face is a shadow. Also, today, on the day of this recording, is February 19th, and today is the official opening day for 2018 tax returns to go into Canada Revenue Agency. So my phone is blowing up today. So those of you that don't know, I film these videos on my iPhone, and I may have a couple, like when texts and phone calls come in, sometimes the video just, for some reason, glitches a little bit. So hopefully there won't be too much of that, but I just wanted to give you a fair warning. So today I wanted to talk about hiring employees. So when it's a good idea, when it's not, how much it's gonna cost you, what are some other options, and all of that stuff in between. So I kind of want to start off and say, smart business owners hire for really just one of two reasons. So the first reason would be to increase the revenue in your business. So that would be increasing your income, okay? The second reason would be to reduce already existing costs in the business. So that would be decreasing, obviously, expenses. So either one of those are affecting your bottom line in a positive way. So they're either, anytime that you're hiring an employee, the goal should be to increase your profit, okay? So the basic math here is that the amount of money that goes out to pay the employee, and we'll talk about a little bit exactly how much that is, should be less than the amount of revenue that that employee will actually generate. So for example, I own a bookkeeping business. Right now I am the only bookkeeper in the business. So let's say I became full capacity and there was no way I could take on any more clients. So then I would crunch the numbers and look, okay, if I hire a part-time or full-time bookkeeper, then maybe I could take on another 20 clients, and the amount of money that I would make from those 20 clients should outweigh the amount that I am paying that bookkeeper on an hourly basis, okay? That's just kind of the general rule there. Now, on the another example would be if I had a business that sold products, and let's say right now I was outsourcing all of my production to a third-party factory, okay? And I sat down and crunched numbers and realized that if I hired an employee to make those products for me in-house, it would actually cost me less than the current expense that I'm putting out for that third-party factory, okay? So those are kind of the two reasons. So if there's any other reason that you're looking at and you're like, well, actually bringing on employee is actually going to decrease my bottom line because I just want to work less, or I just feel like I should have an employee to actually grow, that kind of thing. You may see a little bit of a downturn in the short term, but the overall goal should be that hiring that employee or onboarding that employee will actually increase your bottom line. Okay, if you're thinking of hiring somebody to take on a very specific task for you in order to free up your own time to generate more income, consider hiring a contractor instead. So this can be a really good gateway into understanding what it's like to outsource that specific task, and also to help you set up processes and systems in preparation of hiring somebody permanent. Hiring somebody and then having to fire them can be very expensive and daunting and emotional. So if, as prepared as you can be for that scenario, the better, okay? So for example, if you're thinking of bringing someone on to help you with copywriting or social media management, okay, so that's a very specific task. Hire a freelancer in that field first. In our gig economy, there are plenty to be found, and you can test the waters before you really make that employee commitment. The benefit to working with a contractor versus an employee is it's typically cheaper, and again, we'll kind of go into the reasons why later. There is far less paperwork, so you don't have to worry about pay stubs. You don't have to worry about issuing them a T4. You don't have to worry about a record of employment, anything like that. And you don't have to worry about employment standards in terms of terminating your relationship with that contractor. Unless, of course, you have a contract or something like that along those lines, but there isn't just a blanket law over a relationship termination with a contractor versus an employee. You don't have to worry about paying vacation or withholding payroll tax or anything like that, okay? On the other hand, having an employee usually means having a more committed person with your company. You're able to use all of their skills instead of just one, and you can grow together as a team. Now, there is a fine line between a contractor and an employee. So if you're listening to this and going, well, okay, I'm just gonna hire my admin assistant as a contractor, but really she's basically gonna be employee, I just wanna save the money and the time, you kind of need to think again. CRA has become increasingly selective with who should be considered a contractor, and in some cases, they will issue a ruling that one or more of your subcontractors was actually an employee, and then they will go and take your, like they'll consider you responsible for the CPP and EI, and they will bill you for that. So you have to be careful, okay? So some of the things to consider when determining if the relationship you have with somebody is considered freelance or an employee-employer situation, okay? So here's the first one. Is the person claiming business income on their tax return? So this should go without saying, but please avoid under the table kind of working relationships, okay? They only serve to get you and your business in trouble. Even if you feel like you're doing a friend a favor, that's really not your circus or your monkeys. You should be looking out for number one, which is you. Okay. Any contractor that you are paying should be claiming that income on their tax return as self-employed income. You obviously don't have control over people and their other actions, but if they have indicated to you that they're not going to be claiming this income, for example, they're going, well, you can only pay me in cash, I will not issue you a receipt, that kind of thing, I would recommend not working with them. Okay, the next one to consider is what level of control do you have over the contractor's activities? For example, are you requiring them to show up at certain times or at certain locations? Is there, are you specifically saying you have to wear this uniform or you have to do things exactly my way? Like that, if there's a kind of that level of subordination, that's a lot more like an employer-employee relationship than it would be like a subcontractor relationship. Is the contractor providing their own materials and supplies? Does the contractor have the ability to hire their own employees and subcontractors? Did you choose the method and amount of pay, or are they invoicing you based on their fee? Is the contractor able to work for other clients while working for you? That's a big one. And is the contractor requiring training or direction from you in order to complete the task? So normally a self-employed contractor works independently. They set their own times and scope of work. They may provide services to other people, and there isn't typically any level of subordination that is taking place. If you've been down the subcontractor road and you still want to hire, there is an important question that you should have the answer to, which we're going to go through right now. How much will this employee cost the business? So the first step to this calculation is to determine how many hours that you'll require the employee to work and what their wage will be. So keep in mind that in 2019 in Alberta, the minimum wage is $15 per hour. As an employer, you will be responsible for not only paying your employee on time, but also calculating your employee's withholding taxes, so their personal taxes, CPP in most cases, and EI. And then you'll have to remit them on their behalf. So this usually means that you're going to subscribe to some kind of payroll service or some sort of payroll software. So there's going to be a fee involved with that. So let's say on average that's going to cost you about $50 a month for that service, okay? You also need to consider that you as an employer are required to pay additional CPP and EI on top of your employer wage. So I'm just going to show you this example here. Oh no. Just a moment. Sorry, we're all falling apart here. Okay. Thanks for holding on. Okay. Okay. See if I can make this a little easier for you to see. Okay. So you have, if your employee gives you a timesheet and they say you owe me $1,000, okay? So you have your gross payroll of $1,000. Oh man, okay. I told you I don't have my production assistant here today. So then let's say, so I'm not doing the actual calculation on the taxes because I'm trying to more show you your responsibility for the EI and CPP. But let's say the taxes would be $250 on that. So that comes off. Then your EI is 1.62% of wages up to a maximum of $860 for 2019. As the employer, you will be deducting this 1.62% from the employee's wage each paycheck, but then you will also need to pay your portion of the EI premium. So you'll take the 1.62% off, $1,620. Okay? The employer portion of that is 1.4 times that amount, so it's $2,268. Okay? On the CPP side, so for most employees, you will also need to deduct and remit CPP. This calculation is a little more complex, but basically after the employee has made $3,500, they pay 5.1% of their wages into CPP to a maximum of $2,748 for 2019. As your employer, their employer, you will match this contribution at another 5.1%. Okay, so and I'll show you this example. $1,000, assuming they've already gone past that $3,500 point. So you would take off 5.1% for CPP, and then you would match it at the exact same amount. So another $51 there, okay? Side note, you may have heard about the CPP enhancement. That 5.1% used to be 4.95%, and that's been like that since 2002. So this is the first time that this has increased in 17 years. And this CPP enhancement, like this whole subject deserves its own video, but just to let you know, it will be increasing every year for the next 5 years until 2023. So until it gets up to 5.95%. And then even after that, they're going to be increasing it more. It's just in a different, more complicated way. Again, it kind of deserves its own video. But just if you've heard anything about the CPP enhancement, that's what it is. They're increasing the amount that you have to take off your employees' checks and pay for your portion, okay? I will do a video for it in season 2. So to make things make everything that I just talked about a little more simple. Basically, you have the $1,000 payroll. You're taking everything in blue is coming right off the check. Okay, so that's the employee's portion. So everything in blue gets deducted from that $1,000. That gives you $682.80. That's what you write. The check goes to your employee. Okay, then what you need to send to the government is everything that's in blue plus your remittances. So that would be the 2 red ones and the 3 blue ones. And that adds up to $390.88. So the bottom line here is these 2 checks actually add up to $1,073.68. So for every $1,000 that you are going to pay your employee, you are actually going to be paying $1,073.68 plus the subscription software that we talked about, or the service that you're paying for payroll. Depending on what industry you're in, you may also have to pay for WCB for your employee. So some industries are exempt. So like most office jobs and things are exempt from having to purchase WCB. But if you're in a lot of different industries, and I will provide a link to you to take a look, you're going to have to buy WCB for your employee. And I will, like I say, I'll put the link on because every industry is a different rate. So you can check that out for yourself and see what that would cost you. But even if you don't have to provide WCB for your employees, you may want to consider offering some sort of disability insurance or some sort of health benefits, group coverage sort of thing. So you have to consider those costs as well. So it's not just the wage is what the point I'm trying to get across here. If you've done your due due diligence and you're still ready to grow your team, next week's video will cover all of the steps that you need to take when hiring a new employee, what records to keep, and my recommendations on how to calculate and remit source deductions and file T4s and records of employment. So keep your eye out for the show notes on this episode because they will be full of links for you. And then I look forward to seeing you next week so we can talk more about your responsibilities as an employer. It was wonderful to chat with you, and I hope you have a wonderful week.